Welcome everybody to the February market update. I have some interesting macro slides to show you before we get into the local data. This is the 1-year interest rate chart, which I think speaks volumes, right? This is the number one sentiment indicator that we have right now, and it's going in this direction. It's been a sustained downward trend for a year, which I think is setting up the general buyer population in a better mood than they were in January of 25. Payments are substantially lower with this 1% interest rate move, so I think that just sets the stage for the year to come. This is an interesting perspective on inventory. You can see the white line is 2025 numbers. We're above all those pandemic level years, but we're below the 2017, 18, and 19 inventory levels. So this is kind of a sweet spot, to be honest, for shoppers. You have a lot to choose from at this point, something to keep an eye on. Here's sort of the expectations, from various forecasters on interest rates. We're thinking probably right around 6 is going to be the consensus for the year, give or take. So anytime the rate dips below 6, expect there to be a rush of buyers. And anytime it dips higher into that 6.25, 6.5, expect it to kind of provide a little tailwind or a headwind to the enthusiasm. This is a house price growth forecast, so everybody's basically expecting like modest house price growth. This to me is a good thing because, when we had the 10% a year house price growth, you had this FOMO where it's like, oh, I gotta hurry up because if I don't buy this year, it's gonna be so much more expensive next year, versus fast FOMO. Now it's like, okay, you can take your time and you can work on your family's timeline, not the market's timeline. This to us is a good thing. People aren't really expecting prices to come down that much due to the lack of supply, but they are forecasting modest price gains this year. Finally, some green shoots. These are like happy news items. Look at this. Wage growth is expected to grow faster than home prices in the 2026 year. This is what we need. We need wages to catch up with these house prices, to help with affordability. You can either have rates come down, that helps with affordability. You can have home prices come down, that helps with affordability, or wage growth. This is nice to see some wage growth happening as compared to the housing prices, because this unlocks the market for a lot of people over time. We're still in an undersupplied market. Look at this. We've come off these post-Great Financial Crisis low building numbers, and then here they are. Builders are not building a ton of inventory. What this means is it just keeps upward prices on housing, upward pressure. Here we zoom in. This is the local MLS data. That means these are active listings in Bend proper. Only 442. We saw this number grow to 900 over last spring and summer. So we're looking at 442 listings. Not a ton of change of price. We've seen this number go up higher than half, and here we are less than half the homes have adjusted price. 5.25 is the amount, and 78 days on market. So the inventory is starting to refresh. People are either selling or canceling their listing from last year, which is bringing down this days on market number. It's also bringing down this number of change price listings. Here's the Beacon report. This represents closed homes. Closed homes, 66 days on market average. That's a little bit longer than we're used to. This is kind of what we would expect in that winter doldrum period. We are looking at 2.5 months of inventory. I'm going to zoom in on these really quiet months as far as closings go. Median price, you can see this is, we're going to look at price per house and price per square foot. But look at this. This is at like kind of the value number. On this side of the graph, you want to be a buyer. If you're up here, you want to be kind of a seller at those times. Although there are anomalies in this data, you can kind of see over time, this is kind of represents this attractive value proposition, the low 300s per square foot. Days on market, we're seeing the seasonal effect here. It went back up in January, so we're kind of at that slow, taking time to sell these houses. But every spring, we see this days on market come down into April, come down into May. This is when things pick up, March, April, May, and those deals are negotiated in the month before. So February, we're seeing activity that's going to lead to the March data, and we do expect this days on market number to come down substantially over the next couple months. Number of sales, this is like, wow, fell out of bed, back to these low February, January numbers. January, December, and November kind of held in there, but it looks like January just represents a really slow month. A lot of deals were negotiated in the holidays over Christmas, so that's what that number showed us. Again, expect that to sort of pick up, and it ramps into that June, July, August period is usually when we see the most activity. June, so as a buyer, beware that you're kind of going to be seeing more options over this time period, but also the price usually goes up during the spring listing season. Here you are, bottom line, calm before the storm. It really feels like a lot of calm. People are making plans for 2026. Their sellers are getting ready to loosen up more inventory, and buyers are also sick of waiting on the fence and time to get on with their goals. So the window to get a deal as a buyer starts to close here as we get through the winter months and into this more early March. People are starting to pick up their home shopping more and more as we get into spring. And then after July, it starts to kind of slow down that seasonal summer vacation into the holidays. Expect just more motivated buyers and sellers this year. There's better interest rates, there's better inventory. So it's overall, there's a lot of pent up activity that's been waiting to release, and we're kind of 4 years into the contraction. So we'll look for that motivation this year. And strategic folks are getting consultation early. Now's a good time if you're a seller or a buyer to just get with a realtor to understand what's happening in your market and the homes that you're looking, so you get to participate, whether it's as a buyer or a seller. If you or anyone you know is in need of consultation, myself or anybody from the Bend Reload team is happy to help.